What is going on, investors? Hope the guys are doing well out there. Welcome to the Semiconductor Show here on Equity Empire. We are going to catch you up on all of the news that you may have missed as it relates to the semiconductor industry last week. Also get you prepared for this week because it's going to be a big week. We got a big week of earnings. We've got AMD reporting their earnings on Tuesday, July 30th. Intel follows on August 1st. That will be Thursday. Qualcomm also reporting their earnings on Wednesday, July 31st. We also have ARM Holdings as well on July 31st. That will be Wednesday. We've got a big week of earnings. Also, do we have a rotation out of the semiconductor stocks? A lot of these, including Advanced Micro Devices this week, down 10%, 5%, 8%, or more following. We had a couple of companies report their earnings this week. NXPI, also a smaller company, ticker symbol CLS, which we talked about last week. Do we have a rotation out of semiconductors? Do we have a technical pattern that is setting up for more downside? We'll talk about that. We also got a fantastic question. I tell you what, you listen to the conference call of these major companies and these CEOs are so polished. They're like politicians. They don't answer any of the questions. So you got to get in there and read some of these smaller companies. And we had a great question. And it's one of the questions that we're all asking is, have we had an overinvestment into AI infrastructure? Because look, that is what's driving the massive outperformance that we've seen certainly with NVIDIA, but all of these stocks over the past year and a half or so is the fact that the Googles and the Microsoft and the Amazons, they're spending tens of billions of dollars, not in a year, tens of billions of dollars in a quarter on building out new infrastructure for their data centers. And the question that everybody is asking is, are the build outs and the demand the same now as it was compared to maybe 6 or 12 months ago? And I tell you what, we will have an answer to this question. We actually got a great answer to this question, and I think it will drive some of our decision making as these stocks, again, in the semiconductor industry continue to pull back this week. And with earnings this week, we could see further pullbacks. And if we have a clear understanding on what the demand going forward will be, well, it'll make our decision making that much easier. Let's kick things off with Advanced Micro Devices, otherwise known as AMD. The stock slid about 10% this week, finished the week at about $140 per share. Like we said, AMD is the first company to report out of this group on Tuesday, July 30th. Those numbers will be closely watched. Now, the company lost a president that is set to retire this month. Now, this was kind of a acqui-hire president, if you will. In 2022, AMD purchased the company called Xilinx, and this president kind of came along with that acquisition. He is retiring at the end of August. Now, in terms of AMD's earnings, which again fall on Tuesday, we're expecting about $5.72 billion worth of revenue. That's only, and I say only, going to be about 7% growth. On the EPS side, you're expecting about 68 cents. That would be about 17.5% growth rate. Now, I tell you what, is that good enough for Wall Street? We saw when we look at some of these companies this week, obviously they had a little bit of a rough week. The ones that are reporting earnings, including NXP, saw their shares sell off violently. With AMD already trading at 40 times, is this growth rate of just 7% good enough? It'll all be about that Q3 guidance. So when AMD reports their earnings on Tuesday, make sure you take a look at the guidance. It's got to be higher than 13 or 14% or about $6.6 billion in the Q3, because what investors are waiting for is the back half of this year, and more specifically early next year, accelerating into 20 to 30% growth rate. I tell you what, if this 20 to 30% growth rate doesn't show up for AMD in the first half of next year, right in the beginning of 2025, well, these shares are going to continue to slide because from a valuation perspective, already trades at a premium to NVIDIA and basically all of the other chip designers out there, especially when we look at Intel reports later this week as well. So AMD's got to have that growth rate show up. And if there's any wavering, any sign that it's not, Well, I tell you what, shares are likely headed lower. And what's the upside? You have to ask with AMD. Well, they have to really affirm these upside targets and maybe profit targets as well. Now, Qualcomm also reporting their earnings on Wednesday, July 31st. Qualcomm, not immune to the sell-off in the chip sector, saw its shares down over 6% this week. The company is expected to report about $9.22 billion worth of revenue. That would be about 10% growth rate. So again, when we're looking at AMD in this quarter just at 7%, that's why the future revenue guidance for this company and kind of the confidence that the executives project out into those quarters is going to be so important. The conference call is going to be very important for AMD. For Qualcomm, just solid results, kind of low double-digit growth rate on that revenue side. And look, Qualcomm's in a little bit different space than almost all of these companies. They're trading at just 18 times forward earnings. You're expecting about $2.25 on the EPS. That would be about 20% growth rate. Company earns about $10 per share. That's where you're getting that kind of 18 times forward multiple on this one. For Qualcomm, the upside is an acceleration in this revenue growth. If they can accelerate the revenue growth in the most recent quarter and then give us guidance for their Q4 anywhere above $9.7 billion, well, I tell you what, Qualcomm probably heading for a decent week. Now, ARM Holdings, one of the newest companies, at least from a public company perspective, saw its shares slide 11%. I tell you what, there's some of these companies that are pretty fairly valued. That would be the Qualcomm, but then you've got the AMDs and the ARM Holdings, which have these kind of massive forward multiples on them. For ARM Holdings, even higher than AMD's, up at 95 forward PE. ARM Holdings reports their earnings on Wednesday, July 31st. What we're expecting is just south of $1 billion worth of revenue, although this is kind of a newer company. So these analysts are still trying to get a feel on what this company is doing from a revenue perspective, what they do from kind of a forward guidance, how they handle the conference calls and those types of things. We're expecting very similar to AMD, an acceleration into early next year in terms of revenue, well into the 20-30% growth rate. If ARM Holdings is able to give confidence that not only that revenue, but also those profits are going to accelerate into next year, well, ARM Holdings could maintain this elevated valuation. Although if it doesn't, well, we'll show you technically where you could potentially see ARM Holding heading into next week. Now, speaking of next week, you've got the giant, the OG, if you will, of the chip business, and that is Intel Corporation. They saw its shares fall about 5% this week. Intel reports their earnings on Thursday, August 1st. Now, Intel could benefit a little bit by the fact that estimates for its revenue and its profit have started to get reined in by analysts just over the past couple of weeks. So when Intel reports their earnings and maybe they report something that is in line or just better than expectations, understand that those expectations have been reined in, if you will. Just over the past week, we saw analyst Bernstein lower their EPS estimate from 10 cents down to 8 cents and their revenue estimate from $13 billion down to $12.74 billion. For the Q3, you saw their EPS get shaved by about 10% from 33 expected earnings down to 30, and on the revenue side from 14.7 down to 14.4. Now, the difference that Intel sits in is their forward multiple, while it certainly has been lower, is sitting at about 28, which in my opinion is still just high enough that this company does have to deliver on that EPS side. Now, from a revenue perspective, in the quarter that they're about to report on Thursday, August 1st, you're expecting about $13 billion worth of revenue. That would be essentially no growth. It will be all about the guidance for Intel. This company has constantly kind of guided and missed estimates in the last couple of years and has shares basically gone nowhere. From an EPS standpoint, you want to see some acceleration again in the EPS because, again, this is not the quote value stock. In fact, it was a value trap when that price to earnings multiple was in that 14, 15 times because as revenues compressed over at Intel, certainly their profits have as well. Now, we heard this week from NXP Semiconductors, and maybe that's a preview of what we're expecting this week, because after the company reported their earnings, we saw shares finish the week down by about 8%. The company reported about $3.13 billion worth of revenue, and that was a decline of about 5.2% in terms of its revenue growth. The startup scene is absolutely on fire. This is not necessarily a semiconductor company, but however, building out large language models is certainly parallel to the semiconductor space. Also, this company Cohere, I think I'm thinking of CoreWeave in terms of that pronunciation. Well, you had NVIDIA, Salesforce, and others lead a funding round. This was just maybe about a month ago at about $5 billion valuation back in June of last year. This company was worth $2.2 billion. Well, they just raised more money at a $5.5 billion valuation. This company builds custom large language models for companies, for different businesses, and potentially sovereign governments as well. So while not a semiconductor company per se, it does have investments from NVIDIA, and certainly the more large language models that are being developed, well, that is obviously bullish for almost all of these companies, particularly Broadcom, which saw its shares slip by about 6.5%. Broadcom doesn't report their earnings for a little while. However, what we are seeing is that Broadcom, people are catching up to the Broadcom story with how they are one of the premier AI companies. In fact, if you look at kind of total net sales, they are probably just behind NVIDIA in terms of net sales, in terms of high performance GPUs, or in Broadcom case, high performance TPUs, over to Google. And when Google reported their earnings this week, they saw explosive growth in Google Cloud. So when we talk about here in a minute, do we see continued investment from the hyperscales, which is just a fancy term for the Googles, the Amazons, and the Microsofts? Well, Broadcom certainly will benefit from any of that, and investors are kind of picking up on the story. On top of that, Broadcom, yes, they're trading at 32 times, but it certainly is less than some of these companies, at least from a forward multiple perspective. Now, the granddaddy of them all, NVIDIA, saw its shares slip by nearly 7% this week. And I think briefly, at least on Wednesday or Thursday, I actually think NVIDIA shares were technically in a bear market, down 20% from the highs. They did recover, and we'll hear from NVIDIA, though, about a month from now. They are the last to report their earnings. Now, we will look at NVIDIA's technical chart, and I saw a lot of this floating around in kind of the chart pattern community, is the fact that NVIDIA could see a massive technical sell-off according to its price momentum indicators. I'll show you those price momentum indicators here in a moment. And as always, there's always timestamps down below if you want to jump around to the companies that interest you the most. Now, NVIDIA supplier SK Hynix, which is a memory maker, they make a lot of the high bandwidth memory that actually surrounds the NVIDIA GPUs. And they are going to invest $6.8 billion to build a new South Korean chip facility to make more of this high bandwidth memory, also DRAM as well. That is expected to come in line sometime in May of 2027. So you still have a ways to go. Now, NVIDIA is working on a new AI chip for the Chinese market. As most of you know, I think we talked about it on last week's show as well. The current administration here in the United States has put a lot of export controls on anything as it relates to AI, not just the final finished goods of the NVIDIA GPUs, but also the ASML lithography machines. The high-end ones cannot get sold into China. TSM can't explicitly sell different types of chips or even make certain types of chips for the Chinese market. NVIDIA obviously caught in a rock and a hard place. They'd love to be selling their high-performance chips into the Chinese market. They'd probably have $5, $10, $15 billion worth of more revenue, and certainly billions of dollars more in profits. In fact, the shares of NVIDIA would probably be meaningfully higher if the Chinese market was absolutely open for business. But what they have done is they're trying to work on little workarounds, create kind of lower end or less performing chips, if you will, for the Chinese market. The problem is anytime NVIDIA comes up with a design that works for the Chinese market, they maybe even get to sell a couple of the units into the Chinese market. Well, the federal government, particularly the executive branch, which is President Joe Biden at the current moment, he immediately comes in, and it's not him, obviously, it's his staff and his advisors that know more about this type of technology, and we're not criticizing the president at all. That doesn't mean the president needs to know about AI, but he certainly has people on his staff that know a lot about it, and they're trying to keep these NVIDIA chips as best as they possibly can out of the hands of the Chinese. And NVIDIA is working on a new AI chip, but I guarantee you, the minute they have a finalized one, if this administration is still in the White House, they'll come up with a way to ban it. Now, the company is set for new growth as its next generation GPUs launch later this year. We're expecting the Blackwell design to start shipping, I think, sometime in October. So you probably won't really see the impact from a revenue perspective until probably the following year as we move into 2025, as they have maybe a full 3 months to sell this. Although you should get a lot of tangential or anecdotal evidence that maybe these are flying off the shelves and shares of NVIDIA could run, as the data and certainly the technical specs around Blackwell are incredibly impressive. Now, in terms of AI, a lot of questions are being posed. Certainly, we'll also hear this week. We've got a lot of earnings this week. You're going to hear from Meta. You're going to hear from Microsoft. You're also going to hear from Amazon as well. So we've got so many earnings this week, and they all kind of mesh and gel together just a little bit due to the fact that some of the questions that analysts are going to be asking, the Microsofts, the Amazons, the Metas, is, hey, you're investing tens of billions of dollars a quarter into AI. Well, where are the profits? Where's the revenue going to come after you spend these tens of billions of dollars? And according to an MIT professor, just 1 in 4 AI tasks will be cost effective in 10 years. I tell you what, these MIT professors, God bless them, they are very knowledgeable, but oftentimes they make these types of predictions that just don't end up being true, only because, not necessarily because they're not knowledgeable, at least at the current time, but they don't have full knowledge on how these companies are going to be able to not only develop new chips that are more cost effective, but also the monetization efforts. I tell you what, when you look at the Googles and the Microsofts and the Amazons and the Apples, they're so creative in how they can make money, and there's so many levers that they can pull to make money that, yeah, maybe based on today's monetization of AI tasks, it's not going to make money. Only 1 in 4 tasks can make money. But these companies are real creative, and my guess is they'll figure it out. Now, we also got earnings from a small company we mentioned last week. This company kind of goes hand in glove, if you will, with Broadcom. If you're trying to not be locked down by the NVIDIA ecosystem, their NVLink system, and all their proprietary cables, well, what you typically go to is you go over to Broadcom and you pair some NVIDIA chips up with some Broadcom networking. Now, this company makes some of these networking switches, and currently in the networking business, you're kind of moving from kind of a 400 gig to this 800 gig. And this company, Celestica, is one of the market leaders. Now, it's not an unknown story, because over the past year, shares have skyrocketed up over 200% year to date, up in NVIDIA like 80%. Well, the company reported earnings this week, and it really wasn't good for the shares, down nearly 9%. They reported revenue at about $2.4 billion, but look at this growth rate at about 23.2% for the upcoming quarter or so, expected to slow down. So that's the upside with this company. If they can continue this, not only continue this growth rate, but re-accelerate it into the 20s, and it is possible with these smaller companies. I believe this is about a $6 or $7 billion company. Well, these analysts all estimates can be off quite a bit. You do see that they beat by $140 million, and on a $2.4 billion, that is a fair amount. So if they're able to reaccelerate this revenue, continue this revenue growth that they're having, again, not a wildly overvalued company as well from a forward estimate perspective. We're trading just at 14 on this one. Kind of a component maker, reminds me a little bit of SMCI, but without the hype. on the conference call. The reason why we're bringing this company up is these types of smaller companies, you actually get far more transparent answers. And also, these are component makers that are selling. This company's biggest customers are Amazon, Microsoft, Google, those types of companies. And so this is where you get a window, because Google is not going to answer this question directly. NVIDIA, AMD, none of these companies will answer this question and get you a straight answer, but we got one. And so here's the question. So it's a great question. It comes from Jesse Pitlack, maybe from Cormac Security. Sorry if I butchered your name. You asked a great question. And I love these analysts that come on these smaller company conference calls, ask a great question that really doesn't relate too much to this company, but gives us so much insight into a much larger company. And he asked, there are some concerns about overinvestment in AI infrastructure. And we're going to see this week. When Microsoft reports, when Amazon reports, we're going to get questions about this, Meta as well. And it says, by some of your hyperscale customers. Again, hyperscaler is just a fancy term that Wall Street has given to Amazon, Microsoft, Meta, and those types of companies. He says, can you speak to the sense of urgency you're seeing from these customers for their build outs, for their data centers, and how that might compare to what it was 6 to 12 months ago? So obviously we're a little ways away into this AI build out. We're certainly still in the early innings, if you will, but it is still 6 to 12 months. Many of these companies have been investing 6 to 12 months into AI infrastructure. And the CEO said this: when we talk to our customers, and this is going to be the Amazons, Microsoft, Googles of the world, they feel that we're in the early innings of what they're calling a transformative era. And they also view that the risk of underinvesting is much higher than the risk of overinvesting. So they're actually making the hard decision within their businesses to make sure they preserve the investment in spending on the appropriate technologies to further the AI revolution. This is coming from the CEO of Celestica, ticker symbol CLS, Mr. Rob Mionis. Now, this is such a great answer because this is what we're hearing when you see Jensen Huang get up at Computex and give a keynote. And he says, the more you buy, the more you save. He says all these grandiose things, which you expect Jensen Huang to say, but you're not really sure if he's telling the truth or not. Well, this backs all of that up, that we're in the early innings of a transformative era. That's all we're hearing from Google, Microsoft, certainly NVIDIA as well, is that this is an era that is transformative, that you have to make this investment, that there's actually a risk of underinvesting. If Amazon underinvest, if Google underinvest, well, another company is going to make that investment and then pass them by. And so there's that risk. So there's this FOMO, if you will, from these executives. And then he actually furthers that by saying that they're making the hard decisions. This basically means what they're doing is they're firing employees. They're keeping things streamlined. This is why when you look across tech, there has been mass layoffs. It didn't just happen at Twitter. It happened everywhere. I think Meta released maybe 40 or 50% of their employees as well. They're all cutting staff. And when you read through the financials of these companies, you're like, they made tens of billions of dollars, but they laid off 500 people in this small unit. This is what these companies are doing, is they continue to lay off and keep things really lean so they can preserve that investment and that spending on those AI data centers. And this is incredibly bullish, I think, for all of these companies. When you look at a company like this, there's a reason why it has a smaller multiple than some of the other companies that we're looking at, and it's because your gross margins off of $2.4 billion worth of revenue, $2.1 billion in costs. So your gross profit just coming in at $256 million. Again, it's a $6 billion company, but these are like basically 10%, 12% type of gross margins. When you're looking at an AMD, I think you're in kind of the mid 40s, sometimes 50%. When you're looking at NVIDIA, you're in the high 70%. So companies like this struggle a little bit from a margin perspective. Now, moving over to the technical segment, there is this belief, we talked about it in the NVIDIA segment, that technically you could be seeing a rolling over, and it just makes so much sense. Here's a multi-year, almost 10-year chart of the SOXX SOXX ETF. This is one of the most liquid and most popular semiconductor ETFs. I tell you what, we're just so overextended to the upside. We aren't over the 50-day moving average at the current time, but we are so far above the upper trend line. However, though, if you believe what the CEO says, I think you can probably stay well and above the current trend line. But understand the fact that a lot of this growth, or some of this growth, at least in a little bit or in parts, is already priced in. So when these companies report earnings and they meet expectations, well, that's not likely going to be good enough when the sector and many of these stocks has just been on absolute fire. So we could see further pullbacks in the SOXX ETF. A dramatic pullback would take you from where you're at about 230 all the way down into the 150s. I think something back just under 200 probably should start to be bought. The SMH, also another semiconductor ETF as well. If you don't want to try to pick winners and losers in this segment, well, this one also pulling back from a very logical area. Again, the way I set most of my charts up, if it fits, are these kind of channel lines. When I put a red line, that's a sell time. That's a time when you're not really looking to go long. If you really want to play both sides of the market, that's actually a time where you can go short. Where I have green lines is where you're looking to buy, oftentimes as well. With different types of channels, you can actually divide these in half. I usually put these as a light green line because this is a buying opportunity, but maybe it's not quite as good of a buying opportunity as maybe a dark green line. We are approaching that. I think SMH currently at about 240. You get into the 220 area, and look, it could actually occur this week. As we saw most of these stocks sell off between 8 and 10% last week. I think with poor earnings from AMD, Intel, Qualcomm, and ARM, you could see another 8 to 10 pullback. Now, with AMD, it's not looking good, honestly, technically. We have not been able to really break solidly above 161. I know we did briefly, and we've come back. This is a weekly chart, so there is a fair amount of candles, but we've more recently not been able to put up higher highs above this. You've got an area here at 180. We made a lower high. We're confirming this with lower lows. This stock looks like, to me, we are at a critical juncture. Again, AMD reports their earnings on Tuesday, July 30th. The valuation is already rather extended. Even if you get a pop in AMD where they report some good earnings and they report some good guidance, you could get a pop in this one from the 140s back up to the 160s. But just understand that would just be almost confirming or reaffirming kind of a downward trend. For AMD to really prove that it's doing something different, you really have to get back into the 200s. And I'm not exactly sure what they have to report NVIDIA-like numbers, in my opinion, which is just, I don't think is possible for AMD. Maybe it is. To get up into like the 180s, 190s, and then you can kind of ignore this trend that you've been making, at least in the shorter term. It's not really shorter term. It's really since the beginning of the year, beginning of February or so. You could look at this as more sideways chop. Right now, I see the risk to the downside with AMD. Further downside in AMD should be bought. We'll certainly take stock of this after the company reports their earnings this week. Now, the reports with NVIDIA is that technically it's not set up well at all. Could have a huge move to the downside. That is certainly possible. Again, the way we set these charts up, top of the channel is an area historically. I mean, this is like almost a decade-long chart with NVIDIA. And then I'm on a weekly view here. So each one of these candlesticks represents 5 days, if you will, or a week in time. Anytime you've got to the top of the channel, it has actually not been necessarily a great time to buy NVIDIA. You've had opportunities, actually very short order after you reach the top of the channel, to buy at significantly lower prices. Look at the last time we were here, November of 2021, we were at about $33 split adjusted on NVIDIA. And about a year later, you were down here at $11. So you had this dramatic sell-off, and look, things weren't that bad during that time for NVIDIA, but so much has been priced in. So much good news has been priced in. I think that's the argument some people are making. You get further pullbacks in NVIDIA, your first opportunity is probably anywhere south of $75 on this one. We've also had declining volume more recently, showing you that the incremental buyer at these levels just not necessarily showing up. With AVGO, which is Broadcom, you are in a 15-year uptrend with this one, very similar to NVIDIA. When you're at the top of this channel, it's not necessarily the time to step in and buy. We will approach the middle of the channel, which is absolutely an excellent chance. Anywhere in that 120 range with Broadcom, which is about $30 lower, is fantastic. Intel's in a very unique situation. The stock is not really giving you anything technically other than when you get into the $40 range, this one is a buy. When you get south of $20, it is a buy. Currently, you're sitting kind of in the middle of those ranges. So you're looking for Intel to provide you some evidence that you really want to step in at this price. Intel might give us that evidence again when they report earnings on Thursday, August 1st. Now, Qualcomm, one of the more fairly priced semiconductor companies, also in a longer-term channel line. We're well extended up above this. I think you get an opportunity in this one. Anywhere south about, we'll call it 125, 130 is a great opportunity. TSM also looking very similar. We're just way overextended to the upside on this one. We have pulled back, further pullbacks in TSM. You're actually getting pretty close. I know on the chart, it looks like a long ways. You're actually going from here to there. That looks like a long ways, but just understand that these stocks move probably a little bit more than your kind of average kind of large cap stock. This one's at 160, anywhere south, I say, of 130 is where you're looking for that one. ASML is actually really close. And so this is why you want to keep a close eye. Even on the monster move, maybe you're like, I don't really want to step in on this one, but it's important to stay up to date because look at ASML. We're coming close to the middle of the channel. And the reason why I mark out the middle of these channels is these middle of the channels can be support and resistance for the shares. More recently, it was back in September. This area in the middle of the channel provides support. We're close on ASML, currently at about $888 per share. $775 is your opportunity with ASML. Again, not an all-in type of move, but you're getting close. NXP also very close. Pointed this out last week that after earnings, if you had a drop on this one, anywhere a little bit lower, I think you could actually get close to this one next week. Anywhere south of, we'll call it 220 on that one looks interesting. ARM Holdings is the newest company. Maybe instead of a weekly view, we go to a daily view on this one. Just gives you a slightly better view. Our 50-day moving average, which is this kind of thin, pencil-thin black line, that has rolled over, also making a very steep lower highs. You are so close on ARM Holdings. Problem is you don't got a lot of data on this one, but ARM Holdings reports their earnings on Wednesday, July 31st. You get weakness in this one, particularly if it sits right here at about 130. That can be a buying opportunity. And like we said, this upper trend, while it's held since they've gone public late last year, it's simply not enough data points. You do have areas of support lower. There is a gap in the chart. I mean, this chart just is not that great. You should have areas of support here at 110 just in case you really break lower on ARM Holdings. I've thrown in SMCI. They don't report their earnings for a little while. Excuse me, not in a little while, in 9 days. So we'll be talking a lot about SMCI on next week's show. This company way overextended, very low margin business. This company is relying almost exclusively on NVIDIA to continue its hot sales. Certainly has, but this one over and extended up over the uptrend that I think it really should be making. We'll dissect SMCI's numbers when they cross again in 9 days. I think you've got major downside risk there. Dell Computer also looking very similar. Look at the break technically Dell Computer has made. 50-day moving average has rolled over. You're making a very steep lower highs, lower lows on this one. Look out below on Dell right now. You really don't have any clear support on this one until you get back into kind of that $50 to $70 range. So you got huge downside potentially coming for Dell. Micron is one that we talked about on the main channel. When they reported their earnings, we thought that potentially they weren't good enough to shoot the stock even higher. Look at this. We're approaching the middle of a channel, anywhere actually right about where the stock is right now, although I would wait for AMD, Intel. I'd probably wait until like Thursday or Friday to make a decision on this one, but anywhere in that $100 range. It's not the area where I would buy my full position, but it's certainly an area where you can start a position. Further pullbacks in Micron, which we'll talk about next week if they materialize, certainly can be bought, folks. That was the Semiconductor show for Sunday, July 28th. Hopefully you guys have a rest of your weekend that is safe and fun. We'll be back next week to talk about AMD, Intel, Qualcomm, ARM, and anybody else that reports. We'll preview SMCI and others. Hopefully you have a great day and good luck with your investments.